All right, let's dive right in. If you've ever tried to get your head around VA loans, you know it can feel like a lot of details to remember. So in this explainer, we're going to crack the code. I'm going to give you some really powerful memory tricks to master all the key parts, whether you're studying for an exam or you just want to understand this incredible benefit.
Everything, and I mean everything, starts with this one simple phrase. Think of it like the master code for VA loans. VA stands for very advantageous. And this idea, it unlocks the two most powerful, absolute game-changing benefits of the entire program.
So let's talk about that first part of very advantageous. For pretty much any eligible borrower, the down payment required is zero, a big, round zero. That's right. It means veterans can finance 100% of their home's purchase price. That is a massive hurdle that's just gone.
And the second huge advantage? It tackles a major cost that most homebuyers get stuck with: private mortgage insurance, PMI. With a conventional loan, if you put down less than 20%, you're paying that every month. But with VA loans, nope, it's not there. And that can literally save you hundreds of dollars every single month.
Okay, so zero down and no PMI already makes this loan a total powerhouse. But the benefits, they actually go even deeper. So let's take a quick look at what else makes this loan so, well, advantageous.
For starters, lenders often offer more competitive, lower interest rates. And that's because the loan is backed by the government. Plus, for veterans with their full entitlement, the VA doesn't set a maximum loan limit. And the credit requirements, they're usually way more flexible, often looking for a score somewhere around 620. The only real catch is that the home has to be your primary residence.
Of course, before you can use any of these benefits, you got to unlock that first gate, right? Eligibility. So, who exactly qualifies for a VA loan? Here is your next memory trick, and it's a great one. To remember the service time requirements, just think: wartime short, peacetime long. This little phrase is the absolute key to remembering the specific time frames you need for active duty service.
So here's how that breaks down. Wartime short means you need just 90 continuous days of active service. Peacetime long means you need 181 continuous days. And for the folks in the National Guard or Reserves, the requirement is typically 6 years of service. Simple, right?
And this is really important to know. The benefit doesn't just end with the service member. In some cases, eligibility can actually pass on to the surviving spouses of veterans who either died while in service or from a service-connected disability.
Okay, every loan has some costs involved. And with a VA loan, while you don't have that monthly PMI, there is a one-time cost called the VA funding fee. This fee is what helps keep the whole program running for future generations of veterans. So what's the deal with it?
That's a great question, because it's not just a single flat rate for everybody. The percentage you'll pay is dynamic. It actually changes based on a few key things about you and your loan.
And you know we've got a memory hook for that. Just remember 3 letters: FDU. This stands for first use, down payment, and used number. These 3 things are what determine your specific funding fee percentage.
Let's see how FDU actually works. So as a first-time user with zero down, your fee is 2.15%. But look what happens if you make a down payment of just 5%. The fee drops all the way to 1.25%. And then, if you use the loan again later with zero down, that fee goes up to 3.3%. You can see how the program really incentivizes first-time buyers.
But, and this is a big one, there is a major exception here. For veterans who are receiving compensation for a service-connected disability, the funding fee is completely waived, gone. This saves eligible vets thousands of dollars right at closing. It's huge.
Okay, let's switch gears and talk about the house itself. Since the VA is guaranteeing the loan, they obviously have an interest in making sure the home is a good, sound investment. This is where their minimum property requirements, or MPRs, come in. An appraiser is going to check the home against a very specific set of standards.
And the memory hook for this is the 5 S's. First, the home has to be safe. No exposed wiring or big hazards. It has to be sound. The structure is intact, no leaky roof, no crumbling foundation. It's got to be sanitary, with clean, working plumbing. It needs to have all the necessary services, think functioning heat, electricity. And finally, the overall structure needs to be solid. Basically, the VA is just making sure the veteran is moving into a livable, secure home right from day one. So, you've confirmed you're eligible, you've found a home that passes the 5 S's, what's next? Let's look at the final approval process and what lenders are really focusing on to give that final green light.
Now, while a lot of conventional loans are absolutely laser-focused on your debt-to-income ratio, the VA has a bit of a different philosophy. The key phrase to remember here is that for the VA, residual rules.
So what's the difference? Well, DTI is just a ratio of your debts to your income. But residual income is way more practical. It's the actual cash you have left over at the end of the month after paying your mortgage, taxes, and all your other major debts. The VA puts the primary focus here, and having strong residual income can often help a borrower get approved even if their DTI is over that typical 41% guideline.
And finally, the entire process, from start to finish, can be remembered with one last acronym, CLAC. First, C is for COE, get your certificate of eligibility. L is for loan app, you apply with a lender. A is for appraisal, the VA appraisal gets ordered. And that last C is for closing, you finalize the loan. CLAC. Easy.
And there you have it. We just built a complete memory cheat sheet. With just a few simple phrases, you can recall every single key part of this. Remember, very advantageous is your 0 down and no PMI. Wartime short, peacetime long covers eligibility. FDU is for the funding fee. The 5 S's are for the property test, residual rules for approval, and CLAC for the process.
We've just downloaded all the cheat codes to understand one of the most powerful home loan programs out there. And that really leaves us with one final thought. Now that you can see how carefully this benefit was designed, how does it change your perspective on the role of homeownership for those who have served our country?